right, here we are. How you doing, friends? It is Friday the 13th. That's right, January 13th. And this is the 0 Days to Expiration show. And we have another interesting trade on today. It's been a pretty good week. I think there's a very good possibility we might pin this trade. I had a very good trade against the CPI, which was fantastic. And I may be... Am I 5 for 5 or 4 for 5 this week? Whatever it is, it's pretty good and not bad for a strategy that is low probability. Anyways, what we do here is we trade the very last or final day of expiration of options on the S&P index, as well as the E-mini futures, and occasionally the micro index options. Today, I had a couple of trades on. I had an early trade on with the futures, options on the futures, and that made a little bit of money. And then currently, I am sitting pretty with I guess you would call this an unbalanced broken wing fly. And it looks like it's threatening to pin. It's going in that direction. So we'll have to wait and see. I've got my finger on the button just in case. I don't want to give up any of these profits if possible. Currently, it is sitting at about 300% return approximately. There's the potential for it to get up to about a 1,300% return. And that would be very cool. But you never know what's going to happen. So you have to sit there. And the toughest part for me in trading this and running a service with, I don't know, there's 1,000 people at any one time. There's maybe 200 or 300 people that are active, buzzing around in the trade room, is concentrating on the trades and at the same time running the service, providing support, doing these live streams, because I do 2 live streams a day. One is private for the group, and then I do this show in the afternoon from 3 to 4. So it can get a little hectic. I am perhaps one of the most distracted traders that you would want to be. You wouldn't want to be as distracted. It would be better if there were no distractions. You just concentrate. You notice me like looking like this. The trade's right over there. And it's not a lot of money on the line. I trade with a super small account. And as a reference now, here's my strategy actually. I'm trading as if I have approximately a $25,000 account. However, I never really have much more than a few $1,000s in my trading account at any one time. If I have other accounts that I could move the money in and move it out, but I trade really small. And that forces me to take the kind of position size that I want to take. For instance, in this $2,000 account, I can easily take a trade that might have $200 of risk. You might say, well, it's only 10%, Ernie. Isn't that kind of okay anyways? I said, no. Because in our strategy, we take very tiny risks versus the total capital, trading capital that you have. And of course, I have a much larger account that I trade as well, but I don't have those kind of restrictions. But in this one, for the reference account, I typically keep it small. And I have a bunch of little small accounts and then just trade in that. Usually do pretty well. What I like to do is maybe start with like $1,000, $1,500 and grow it to about $3,000, $4,000, and then pare it down and then move the money out and just keep on doing that, rinse and repeat. So that is one way that it keeps me focused and on target and fighting this distraction, because I never really have to worry about something running away from me. I keep my position sizes small, they're under control, and they're doing well. Now, with that, I've been achieving, since this year primarily, approximately, depending on the month, say 4 to 7% per month. I think it's averaging around 5.5% right now. And that's very good. And my goal is to do that consistently. Now, that's with a $25,000 account. Could I do the same with, say, $100,000 or a $500,000 or $1 million account? Theoretically, you could. Of course, when you're scaling up like that, you take, I guess, a different accounting for what you're putting at risk. And generally, as you go and scale up to larger accounts, you reduce your size a little bit and then start doing a more balanced approach for the remainder of the money to make sure that it is stable or staying ahead of inflation. And so, like, one of the things that I do is I roll a significant portion of my large account in and out of treasuries. You get an account with treasurydirect.gov, buy short-term treasuries, 6-month, year, even 2-month, whatever, and just continually cycle them in and out. And with interest rates very high right now, you're going to get some pretty good returns, and it's safe. So that would be one thing to do. The other thing that I do is buy physical assets. So the beginning of this year, around the beginning of April, I actually dumped all my physical assets, all the silver and gold and pre-1933 gold, and just dumped it all at about, I don't know, between $1,900 and $1,930, I think it was, plus a bunch of the silver. I didn't like holding the silver. The silver is just so bulky. Gold is so compact. So I prefer holding gold. But anyways, I got out at what I thought was a good price. This is after we had the big spike up, and then it started to wane, and I thought, okay, good time to get out. And then in November, I've been talking about this here and as well as in the group that now I felt was the time to buy. And I think gold got down to about $1,650. So I've been buying. And so that would be another place where I think is a good place to put your free cash. And gold is super liquid if you know how to do it. And one of the best ways to invest in gold and silver is not in the bullion. It's in the rare coins and really high quality investment grade coins. If you want to put your money into solid assets, that's the way to go. Now, it takes a whole nother skill set in order to understand what are the best values and what you have to do. So, for instance, you need to have your subscription to the gray sheets, and they will show you what dealer prices are, and then you'll know what price that you need to pay for a particular coin and not over that. And in fact, you might even want to get it under that so that if, per se, you wanted to go to auction with it, you're going to pay a 10% auction fee. So it would be best if you can get your coins 10% under the dealer price so that you can account for auction fees or whatever. And so that's the first part of that. And then you want to also have a really keen understanding of the state of the numismatic industry and which coins are sought after and which collections are sought after. So putting together a collection is often more valuable than just having the individual coin because it takes a lot of work to put together a collection, and people that want to buy a collection are willing to pay the money and pay a premium for that if it's all together and it's complete. So that's generally what I do. I try to create a complete collection. So for instance, if I'm investing in Morgan silver dollars, I want maybe some sort of typeset, whether it's all the years or a specific mint or maybe certain types of irregular coins. And so you look for those and you look for the highest possible grade that you can get. Now, Morgans in particular, man, they can vary in price by a huge margin. Morgan silver dollars I'm talking about that were made between 1978 and 1921. There was a big gap in there up until 21. But most of the coins that I get at the quality I get are anywhere from very low, maybe $1,200 and a high of $11,000, $12,000, $15,000, $20,000 for a single coin. But you have to get the mint state that you want. And generally, from a real high-end collector's point of view, they're going to want mint state 65 or above. Now, I don't even go for that. I go for 66, 67, very rarely a 68. That's almost impossible to get. But a 67 or a 66 with a CAC sticker on it or a gold seal and then graded by a reputable firm like PCGS or NGC, preferably PCGS, and little things like knowing that, hey, if you get one of the old rattle holders, they're generally better because they were the real old PCGS holders that they were first grading them. And so they went above and beyond and actually gave really strong grades, or I should say, they undergraded really good coins. So what they were trying to do is be very tough on coins. Now I think that there's a little bit of variability because they have many more people grading, and they all have different. It's definitely it's objective and subjective at the same time. But anyways, that's important because the slightest difference or toning or anything about that particular coin, even though it might be you have two equal coins that graded exactly the same, eye appeal is such a big thing. You take a look at these two coins, and a dealer might or a collector might say, I love this one, I hate this one. And they could be graded exactly the same. And so that could mean the difference between getting, say, 15,000 for this one and 7,000 for this one. But anyways, if you want to store your cash and you want to put it someplace, you might think, what's the liquidity of something like that, Ernie? Sure, I can put that in there, but I would have to hold it forever, right? No, not at all. These are some of the most liquid investment grade items that you can get. You can go to any dealer, any reputable dealer, maybe not your local coin shop, but it might be your local coin shop. It depends. If they are really connected into the network, or you could go to auction like Heritage or Stack Bowers or something like that, and you can put it up for auction, and you have real pros that will hawk your wares and get the best price. Gold is just off the hook on these services. And if you're really diligent and crafty, you can lowball bids for large collections that sometimes something gets overlooked, and you can come out of that with just this incredible deal. And that's basically what I do. I do that, and I build up a collection, and then that's it. That's the way to go. So if you ever wanted to know more about that, give me a call, and I can get you started. But as far as I'm concerned, if you're going to buy gold or buy silver, I would buy the bullion. I would only get, here's another thing. Like everything else, like in trading, you have a spread. You have what the premium that you're going to pay, and then the premium, and then less the premium, what your dealer is going to pay. And so you have to keep that in mind, because when you go and buy coins from like APMEX, even rare coins, or even modern bullion coins that are supposedly proof or something, the price that you pay there is one thing. You might pay a 10 or 15% premium. You go to your dealer, and he might not even give you spot. He might give you a percent under spot. And so you're losing a lot of money there. So you go to APMEX or Money Metals or any of these other places that are selling these type of coins, you're going to pay through the nose. And so that's not where you want to go. It is definitely not where you want to go. You want to pay as little as you possibly can. And silver right now is just unbelievable. Also, the type of coin, like even if you're just buying bullion, you buy silver bullion, and if you're not buying American Eagles, then you're basically throwing your money away. Even buying Canadian maples, I consider them second best to American Eagles. Sure, you might get a good price, but you're going to sell them under spot to a dealer. You buy Eagles, yes, you're going to pay a premium, but you're still going to get a premium when you sell them back. Right? Same thing with gold, whether it's Buffaloes or Eagles. You want that. You don't want maple gold, although it's one of the better ones because it's got 4 nines gold. You just don't want those, or Britannica. You don't want those because you can't, the spread on them is just too big, and you're going to get raked over the coals. Chris says, I bought a few boxes of old coins in UK auction recently, had several draped bust dollar coins. Yeah, they may or may not be worth anything. So don't be surprised if they're worth a lot less than you think. Just telling you that nothing like that goes unnoticed. Trust me, because it could look really good, but then you find out that it's cleaned, and then what you thought was a $4,000 or $5,000 coin ends up being a $400 or $500 coin. if you wanted to give Rob Fresno is asking, if you wanted to give your grandchildren coins as gifts, what would you buy? I would say old quarter gold or quarter eagle gold coins, pre-1933. That would be within reasonable price, and you could get something nice that they could, and it would be in a graded slab, and that would probably be the best way for kids. If you had the money, then the old coins would be better because they're not only will they retain their gold value, but they will also appreciate over time. So I think that pre-1933 graded gold coins would be the best thing to give to your kids or grandkids. Chris, it all depends on what you paid. If you want a semi-professional to tell you what they're worth, I'd be happy to do it, but it would just be a ballpark. Let's see. Diesel Viper. So it's better to buy bullion closest to spot as possible, or you should just buy American Eagles and get them from a reputable dealer, right? The bullion is tough. Money Metals is by far the best dealer to go to, as far as I'm concerned. That's what I would do. And for you old farts, you know what I would do? If you have like Social Security or something, set up an account with Money Metals monthly and buy buffaloes, gold buffaloes, the pure gold buffaloes. Every time you get your security check in, boom, get another buffalo, put it into your safety deposit box. And let's see here. Let me just show you the trade that we have on right now. It's very near a pin. Chris, like I said, if you want to know something about the coins that you have, take a little inventory of them and take a picture of the ones that you think are cool, and I'll tell you what the range of the possible prices are for them. So here's we are very close to a pin here. There is a possibility. Right now, this trade is worth $607. I have my SPX hack all ready to go to lock in my price right here. And what do I mean by that? This is a PDT, pattern day trader hack. So this is a call spread, and you can see that I'm about to put on a put spread. Now this put spread has the exact same strikes as the call spread. So here's the call spread strikes right here. Boom, 39.85, 4,000, 4,010, and here it is 39.80. But these are calls. Now these are puts, and I'm selling it. These are all long. This is a long, a short, and a long. And so I'm going to sell. I'm going to go short, long, short. So it's going to put on but also instead of calls, I'm going to be putting on puts. So it won't be closing these. I'll just be buying this new spread, a put spread. And that will lock in the profits. And the reason why I'm doing that is that it will save me from getting a pattern day trader strike. Remember, I told you I had a very small account. And so, yeah, this account, super small. It's only $2,600 in it. I have 3 day trades left. And so I want to preserve that, all right? I want to preserve those day trades in case I really need them. So you can see here, it's up at the account. You don't see the account number because it's showing that I have many account numbers. I have several accounts in here. And like I said, I keep several accounts so that I can keep money in all of them and then push the money back and forth. All right, that's getting up there, man. We're at 334. We're getting close. We might get a pin trade here. So for a cost of $100 getting into this trade, it is possible that I could come out of this with about $1,400. That would be sweet, or close to it. So that'll be a nice trade. Got to get ready for holding on to this. Now, one thing you got to watch out for near the end of the day is look at this. See, the price is just moving up. I'm thinking, I need to take advantage of this because if this is a runaway, it might just overshoot my profit potential. See, I'm right like at peak right now, but it is moving up fast. And so I'm going to watch this very closely while I'm talking to you guys. See, look at this. We don't want it to go much higher than this. The center strikes are at it's at 4,000. Now this is the SPX. What I was just showing you was the E-mini S&P. Now there's about a 20-point difference between the two. All right, so we're right about there. See, now I'm on the falling edge of this. All right, we got to be really diligent here. Maybe we'll get a little bit of a pullback here, but it looks like it wants to take off, doesn't it? Looks like it wants to take off. Yeah, I got to get out. Got to get out. See, that little move there cost me about $150, $200. Let's see. If we can get a little pullback, that'd be better. Little pullback. Yeah. And I have to make sure that I do it on a quarter. So it has to be like $11.50 or some quarter dollar amount. Let's see if I can get $11.50. Man, that is, look at that thing go. Need a little pullback. Come on, baby. Little pullback. So we're at 20 minutes till expiration. Might have to take $1 less. Is it continuing to move up? Look at that. All right. So what I'm going to do is I am going to remove these guys here. Looks like we're coming back. Looks like 950 is where I'm going to be at. So I don't want to hold on. I don't want to get out too soon because then I'll be cheating myself. Where am I at? Let's take 1075. See if we can get that. We'll take 1050. All right. Took 1050. Not bad. We'll take that. I don't know. What is that? That was about $500. All right. We're happy with that. It is very possible that we're going to pin today, but it also looks like it's going to keep on going up. It ran right past the center strike, so I wanted to make sure that I maximized. At my max, I was at about $600 profit, and I got out with a $500 profit, which isn't bad, considering that my entry into that trade was only $100. All right, let's see. Max is saying, man, I'm kicking myself so hard. I got out at 150% when there was a big dip around 130. How do you deal with the woulda, coulda, shoulda regret of that situation? That's happened to me many times. You have to follow your plan. Now, I don't know if you had a plan or if you were just getting a little nervous and you wanted to get out, because my profit was going up and down around that time as well. But my plan at that particular time of day was to give it a certain amount of leeway. Now, what I do is I split up my day into 3 segments because of the 3 primary differences in terms of premium decay. So I have the morning, the early afternoon, and then the later afternoon. And then each one of those, then I evaluate price based on its proximity to my strategy. Because the decay is going to be different, and then the shape of that decay is going to be different in those particular areas. And so then I break that down and then decide when I'm going to hold and when I'm going to fold. And in that particular case, I just held. It was just an objective thing to do. Once you start planning out your exit strategies that way, you become a little bit more objective and so forth. Now, does that mean that you might get out prematurely and not get the best price possible? Absolutely. It's exactly what it means sometimes. But other times it's going to keep you in there to maximize your profits. So that's really it. But Frederick is good with 310%. Eugene says, interactive broker sucks. Closes ES spreads at 320, partially breaks the fly, and remaining part give me a loss, but it could have been a pin trade. You can't even get a real closing price of the fly. Now, interactive broker, you know that when you open up an interactive broker account, they don't give you real-time feeds right off the bat. You have to purchase them and ask them to implement the real-time feed so that you're getting real-time prices and interact. I don't understand this. I once opened up an Interactive Broker account with $10 friggin' million. No, actually, no, it was a $5 million account. I opened it up with $5 million, and I started trading, and I go, what the hell's going on here? These prices aren't real. And I realized that I had a 15-minute delay, and I couldn't believe it. I put $5 friggin' million in there, and I had a delay on my account. So I had to call them up, and getting a hold of somebody at Interactive Broker, that is a pain in the ass. So anyways, I finally got a hold of them, and I got it changed. But it took 2 days to happen. And I'm sitting with all this money, wanting to trade, and I couldn't do anything. So anyways, at least that helped me at the time. I was not real familiar with Interactive Broker. So I had to figure out what the hell I was doing with it, because it is a kludge of a program. It has everything that you need, there's no doubt. The problem is that it has grown over the years, and instead of refactoring it and then getting rid of the old and bringing in the new, they just keep on slapping on stuff onto it until there's 30 ways to do everything. And it's hard to figure out what the hell to do in Interactive Broker. So I feel your pain, Eugene. I really do. I like Thinkorswim for that reason, mostly. Am I out of all my trades? Let me just check. Yeah, that's 0. That's down. Yeah, that one's closed. And so the only thing I have open are the SPX, unbalanced fly, and then the hack. And so it was another good day. All right, cool. So I started the week off with this account being at about $1,100. Now it's at about $2,400. So not bad. Max says that Interactive Broker kills me sometimes too. I have to be careful to not use the same strikes twice or on different spreads, or automatically close and reconfigure the legs into a weird combo. Yeah, I'm just not a fan of Interactive Broker. What was the margin for my trade? The margin on that trade was about $600. No, not that much. About $500. Pretty sure. Yeah, $500. Are fees on Thinkorswim higher than IB? Yes, they are. Interactive Broker, if it has one thing going for it, it has excellent fees, particularly on the E-mini S&P futures. It's definitely cheaper. With the amount of money that we're talking about, so for instance, in this trade that I just did, why am I worried about fees? I'm just not worried about fees, because the fee based on the amount of money that I'm returning on a trade, if I'm going for a trade to try to make $500, $600, $700, what do I care if the fee difference is $8 versus $14? I don't care. Really? I really don't. Even if it's double, $8 versus $16, I don't care. Compared to what I'm going for, $500, $600, $1,000 on each position, that commission is irrelevant to me. All that is really important to me is what is the benefit that I can get from holding those E-mini futures over something else. Or so if I have to choose a broker based on fees versus based on what I can trade and the viability of the platform, I'd go for the viability of the platform every day, because that will ultimately make me more money. All right, John Boston wants to know, can I ask an honest question? No, you cannot. How do I know it's honest? If you have a $5 million account, why do you do this then? Because I teach people. This is what I do. I teach people how to become professional traders. I enjoy building a business, right? That's what I enjoy doing. I don't know how else to explain it. I haven't worked for anybody for, let's see, when's the last time I went into an office? That would have been about maybe 10 years ago. And that was on a consulting gig. Last real job I had was maybe 20 years ago. So I do what I want, when I want, because I enjoy doing it. I enjoy being a coach, a mentor, running a business, building a business. That's what I'm doing here. This business is about 1.5 years old. I hope that in 5 years, this business will be worth, instead of right now, it's generating pretty good revenues, but maybe in 5 years, I'll be generating $10 million a year. Who knows? That's what I enjoy doing. So maybe you can't understand that. That's fine. I don't care. All right. Let's see here. We've got three. Let's see. Where is the price now? Has it kept on going up? See, if I stayed in, I would have been much better off. Oh, thank you, Max. Max says, you certainly seem to love what you do, Ernie. Excellent coaching. Thank you. See, had I stayed in, I would have done much better. Let's see how much better I would have done. Now, I can still take the put off. See that? It's like almost right in the middle. All right. So I missed out on a couple $100, almost 300 now. And I could take it off right now and potentially gain another $500 or lose it all. That's what I could do. So this is what it looks like if I had remained in it. What I did was I turned off the view of the puts. See, with the puts on, I made $450, it looks like. If I take the puts off, if I were to remove them right now, I would be sitting right inside of this right here. Now, it went all the way out to here and then came back. All right? And see, right now, I'm down about $300 from where I could have been because I followed my plan, first of all. Now, what is my plan? Let me show you. Where is it? So this is actually the framework to the plan. But essentially what this is a framework for taking profit in the strategy. And as you can see, there are 3 legs to this plan. And there's the morning leg, which is from 9:30 to 12, the afternoon leg that is 12 to 2:30, the early afternoon, and then the late afternoon from 2:30 to 4. We're obviously in the 2:30 to 4 era. Now, on this particular plan here, my goal is to never give up more than 25%, right? So I reached $600. I came down to $450. So I had to get out. That was predestined. That's what I did. So there you go. So this is what we teach in the service, and that is how to develop a framework and then how to log and journal all of your trades, do a retrospective every week, and every week figure out how to get better and build up your playbook. And over time, you will become, there's no doubt, if you do this, you will become a professional trader and you will be consistently profitable. That's what we do. If you want to join, there's a link down below. You can take a trial. And then if you join the yearly program, I will rebate the cost of the trial and you'll be on your way. Yeah. So this will tell you something, John Boston. What I charge for what I do is a pittance compared to what I could charge. Now, if I were really looking to build up this business, obviously, so I want to charge a good fee that everybody can afford. But the experience that I have being a former institutional trader, a former fund manager, actually a current fund manager of a 9-figure fund, the former chief technologist of a Fortune 50 company who provided trusted advisory services to the C-level folk of Fortune 50s, Fortune 5s even. All right? Someone like me could easily charge 10 times what I charge. Easily. Now, would I get as many clients? Would I be doing this on YouTube? Would I be building this business? Probably not. Because this is what I prefer to do. I prefer to help people, help retail traders become professionals. Thanks, Max. Okay. Oh, I didn't even show that, did I? Talked about it. Or did I? Yeah, I did show it. Oh, I'm showing something else here. There we go. Still working on the production value. That'll get better, though. That'll get better. We have 2 minutes to go. And, oh, look at that. I am kicking myself. Look, I am down almost $500 from where I could have been. It came back. My strategy got me out. That's okay. I made $1,000 on a trade yesterday. So look at it. It's going to pin. It's going to friggin' pin. It's going to pin. Oh, man. But it could have also gone out here into nowhere land, and I could have been, what, $500, $600 down. Wow, look at that. It's going to pin. I can't believe this. I missed out on now almost $800. Still made good money, but so if you're wondering how Max is saying, hey, I kick myself for getting out at 150%. All right. So I got out at 400%, 450%. All right. And it just pinned. I would have made $1,400. I missed out on $950. And you just saw it. Look at that. Perfect pin. Almost a perfect pin. Within 88 cents of a perfect pin. Pretty good. I'll have to capture that one. But that's okay. Like I said, trading minimally with never more than maybe $100, $150 risk. I took my tiny little account that was $1,100. Now it's at about $2,700 in just a few days. Never taking more than $100, $150 risk. All right? Let that sink in. Let's see, Jacob's asking, over time, do you plan to expand the strategy into other markets, like fixed income, futures, options, or something? I can never say never, but my one focus isn't necessarily markets. And so, yes, I could expand into other markets. My one focus is to take this one strategy or this family of strategies and use it to the best of my ability to help people with the process of becoming professional. That's the primary focus. So over time, and there's an expansion of it, and if I want to attract other people, maybe to other types of strategies, although I would still want to keep the basic tenets of this strategy, and that is the underlying philosophy of using asymmetric trades. So that'll stay the same. So if I can move it to other markets and do something similar, the answer is yes. But that's a good question. Thanks, Jacob. Let's see. Multiscan says, could one XSP and peel out of the position to leave a little on for a possible pin? Oh, yeah. So what he's asking is, could you have multiple positions and then take a few off when you've achieved maybe a guaranteed profit and then leave one on or two on for a pin? Absolutely. You could do that. No problem with that. I just have to put this into another account here. Hold on. Need to put this in here because it's very important. You'll want to see this. All right. Let's see. But some of the options that Jacob had asked about fixed income, futures options. We are doing futures options. All right. So we do options on futures as well as options on the index. Now, as far as fixed income futures options, that's all one sentence. So in other words, Treasury futures. Now that would be very interesting. I think that is a definite possibility, even soon. If people that would like to trade Treasury futures, I'd be happy to go into that. I've got a ton of experience trading Treasuries and trading it at notional values of hundreds of millions of dollars. So yes, I would love to do that. All right. Let's see, we got to bring back the big head. There we are. And let's take one more look at that pin trade. Look at that. That's where the market ended up. What a call, Ernie. Pat yourself on the back. All right. Now back to the big head. All right. I got to wrap it up, folks. Again, if you'd like to try out the service, go down below. The link is right down below here. 0-dte.com/try. And give it a shot. It's not an alert service. This is a coaching and a mentoring service that will teach you a strategy like you've never seen before, methods and process that if you stick with it and under our direction, you will become a professional trader. All right. Thank you very much. Got to go walk the dogs. Peace to you all. Now it's time for the music. Have a great weekend.